Hello, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Today was Friday, October 5th. October 5th, 2018. I hope you had a great trading week. I finished up above the 30,000 mark in the combine, but I'm treading water. I've see things that I'm writing down, and I am debating about how, if at all, I would want to approach any short trade. Any long trade. The only long trade signal that I saw today was after the market ran down through 73.83, actually went to 73.83. Let's rephrase that. There was a high blue bar volume that came in at 8:50 a.m. And also so where I saw some value today, if I would have went long, was roughly around either between 74.08 to 74.16. Now that market went up to 74.98 before turning around. I had 3 trades on the day, and I finished up plus 23 ticks. Now as far as my trades went, I was up 13 on initial entry, then I went down to plus 2, plus 4, plus 2. Taken I said a 13 tick win, 11 tick loss, which 11 ticks was 1/2 R today, by the way. So I was running with 11 tick stop, in other words. So I took 13. My 13 tick winner was went down, I think, almost 2p, and then it came back up and knocked me out at plus 13. And that move wasn't the move that went to 73.83. The second trade was around the 74.77 mark. That one knocked me out at 74.88, I believe. I re-entered again because I believed that it was a valid setup. I just was too close to the market at that point. And that one went down, and I was able to grab a 1p target on that. I noticed that we were looking around the 46-47 area, that there was some support in that area, and it actually bounced off of that. So that was early morning support that I was using to get short in the start of the morning. So if you think about another principle of trading, prior resistance becomes support, and prior support becomes resistance. So I looked at a level that I was looking at getting short at originally around the 74.50 mark, and I used that 74.50 as support coming back through it again. So if you think about the market today, it originally went to the low of the day, went to the high of the day, then it went to around 74.50. So it, like I said, prior resistance became support. So I exited at that level, and I called it a day. 3 trades. I got above 30,000. So the way I look at it, I'm 1 trade away from having a new record on the account and be able to move, that much closer to 32,000. So all short trades this week, as far as I know, and I think I caught 1 long for 10 ticks or 11 ticks. So that, in a nutshell, is how I traded. So I would say that for the week I was about 95% short, if not greater than that. And then I had 1 long trade, I believe, setup that I took on. And the only other long setup I saw was where I just talked about right there. As far as my notes, I'll read my notes to you, and it's not as helpful for other people that like to listen. I wrote down on October 5th, Friday employment monthly report. No real reaction off the numbers in the CL market. Stand aside. What do I believe will happen is a whole lot of nothing, until some volume comes in to show its hand. At 7:38 a.m. CST, it looks like there is a bull trap forming to trap some shorts. Here is what I'd like to see: some volume HVS come into the market above 1,000 to drive some interest. And that's it. So I'm placing trend lines on the chart to see the general direction of the market in lieu of having any HVS. Currently, this allows a picture of 2 hours of market movement. First trade GAN fourth time through, going for at least a low of 74.33, and that ended up the trade that I got in. I believe I got in around 52. It went down to around 26, I believe, before it came back up, or 18 or 9, somewhere in that area. So there was some violent upswings. I was running with a 21 tick trailing stop behind it, and it hit it. So whatever that, so it hit me plus 13. I think I had 74.52, and I was trailing. I was able to get 13 ticks, and I was trailing 21 behind it. So that was on trade 1. First trade down to lows, I got 13 ticks out of a possible 26. On the trade, as it started back violently on 2 separate occasions, the market was behaving in an erratic manner, coming off the lows, not allowing for anything more than a 1p move on any short side entry. Now it's time to wait and see if a BBV HVS. So what I'm saying right there is I'm going to wait for a blue bar volume, high volume spike bar to come in. I did wait for that. What happens next is the highest volume bar during the trading session was red. RBVHVB 2398 at 8:50 a.m. CST. As we went down to 73.83, there was also a BBVHVB of 1985 at 8:50 a.m. CST as well. So what we saw at the 8:50 mark was a high red and a high blue that kind of offset each other, and I treated it as a tiebreaker. But I guess in that sense, I could have taken the long. So the long that I saw coming off the lows of 73.83 was to come in at 74.08. But here's the reason why I didn't take on the long side trade. It was a Friday. It's employment numbers. The initial reaction to all this was down. And historically, if there's any day that the market doesn't hit the highs and lows, and a lot of times with no market direction, what you'll see on Friday is the market will run the lows. If it's a short range, the market will run the lows or run the highs, or run the highs and run the lows within the trading session. Today it did that. But as I look back at Employment Friday, now this happens once a month on Friday, and today was the Employment Friday, so there's like 12 times a year that this kind of happens. More times than not, if there is a initial reaction to the market, it has a tendency to continue following that trend. So in other words, I was expecting the short side trend to continue on and not reach up to the highs. Now once it did reach up to the highs, I decided that I would take on the trade, and that's where you saw the high blue bar volume come in. I was seeing a long signal at 74.16 when the market was, from what the market was showing. I thought about taking a long for a 1p up move, or also greater than the high, but I was also thinking we could go down since it was down initially on the monthly employment numbers. I was right on the exit on the third trade. Now my third trade that I took on was, like I said, 74.77. I had 3 trades. One was a loser, 2 won, 13. I think the other one went 20 something ticks. So I got a 1p move on the third and last trade that I was trading in. That trade itself got me above the 30,000 mark. So what I saw is we hit 74.98. There was another high blue bar volume, so you saw some exiting. So the tiebreaker, as I look at it, the tiebreaker scenario came up. So you had a high red, a high blue, kind of equal. There were only 400 and difference between the two, so that kind of puts it at a tiebreaker. So what I'm looking for is another 1,000 volume bar to come on the charts to give me some kind of indication which way the market wants to go temporarily. Blue came in. I wanted to be on the short side. I took the short down to 74.56, I think was where I exited the trade. But it went to 51, so it ended up going 1p. It hit what was prior resistance became support. It hit that support and it bounced off of it. And before I hit the relax button behind me, the market decided to go back up. It was up over 80, 81 when I hit the relax button. I actually minimized the charts to take a deep breath and just be done. So as the week goes, there was some really decent trades that I had, and there was some trades I wished I would have taken. So I did some videos this week of recaps of some of the trades that I saw but I didn't take, or one of them I did take and I got a little too close to the market. I was proud of myself today on my very first trade. The market, I got in It went down initially, it came up a little bit, and then it went down to the lows of the day. So I followed the advice I talked about yesterday to allow the market on the GAN signal to give it one more up move if it wants to go up, and then come down. And then at that point, when the market comes down, so basically you're in, the market comes, it comes back a little bit, and then that next time down is when I get to break even. So I did that today on my trading, the first trade. That first trade, I really believe that was the best of the overall trades to run for 3P or greater. After we hit both the low and the high on the trading session, the third trade, basically I was looking to, my goal on the trading session was get above 30,000 or greater if the market would continue to move in my favor. It didn't. It went down to about 46, 47 on that last swing down, and then it came back up. Like I said, as I relaxed and hit the button to relax and minimize the charts behind me, the market was up to 80, 81 when I hit that minimize button. So I felt like I did the best I could do within the given period of time, at least on the last trade. The first trade, I believe, was the best shot of the market to break through and head down. Now, as far as GAN numbers that I was looking for on the short, I think it was around 73.33, roughly 73.36. That would have been the GAN number if it wanted to run to it. So it got within what? It went to 73.83. It got within 50 ticks of hitting the magic number today on GAN. As far as angles went, it almost went to a GAN 90-degree angle on the down. That would have been 73.81. The low was 73.83. And on the other side of it, nope, we never did make anything up. The GAN 45-degree angle on the up would have been 75.10. We stopped around 74.98. So as far as angles today, the market almost made a 90-degree angle on its descent, and that's where it stopped and decided that it didn't want to go any further down on the day. That's based upon the square of 9 that GAN worked out. So that's how the descent angles, and that's basically when I look at GAN, there's pretty much two things I look at. GAN is the 4th time through setup that I like to get on a short side entry. More times than not, I like to do that, and I'll pay attention to where I think a long might come in, but I don't normally take the GAN 4th time through on the long side. So the GAN 4th time through on the short side is what I like to take, and I look for that, basically like a flag pattern, to be able to hit the bottoms of it and then use that. It becomes that, like I said, prior resistance becomes support, support becomes resistance. So that comes back to that kind of component on the trading day. The other thing about GAN that I like to use is his magic number and the angles based upon a square of 9 work. So that gives me a forecasting ability that also checks in with the Fibonacci numbers, either retracements or extensions. So it gives me some numbers to look at, and then obviously I got my spreadsheet where I believe the ranges. So I have 3 different things as far as forecasting that I do to be able to kind of determine where I believe the market can go. So I have the work that I work with, the Van Tharp with P versus R. I have the Fibonacci extensions and retracements that I use, and also I use the GAN numbers. All 3 of those combined help me kind of determine and forecast out where I believe a market can go on a daily basis. More times than not, I'm looking at the market not to go further than a 12p move in any given day. Today that would have been, if it would have moved 12p today, that would have been $3. So that was I guess the extreme ultimate range today would have been a $3 move from highs to lows. That's about it. Today we went about $1. We went from 83 to 98, so we went a little greater than $1 and change on the day. So if you look at that, that was about a 4p move overall today. So it went 4/12 of the ultimate extreme type of movement that it could have went today as I look at my trading ranges. All right, that's about it. Hope you have a great rest of your weekend. I hope this helps you as you're trying to determine your own trading strategy. Those that know I'm at Top Step Trader, still plugging away there. One of these days I'm getting back to funded. My overall goal right now is this year, keep refining my trading strategy, keep looking for, if I can find anything I like on the long side that's profitable to use that into the 2019. But basically staying away from all side of the long side trades, grinding it out, get out of the combine right now, move into FTP, get out of FTP, and then get into funded. But the overall goal is once I get there is to stay there. So I'm kind of happy where I am in my trading right now as far as how I'm growing as a trader. And I feel like, you know, what I'm trying to really try to get away from is the fluctuations on the downside when I do have losing days, to control the losing days a little bit better than I have in the past, so that I have days like this where I can recover and get ready for the next trading day. So in other words, follow my own advice, live the fight, live the trade another day. That's it. This is Dave Knight here from 123 Day Trade. Thank you for watching. Thank you for being here. That's 15 minutes on a Friday, typical for me to go about 15 minutes. I look forward to seeing you on the next video I put together. Bye for now. Have an awesome weekend. And as always, I hope you had a hell of a lot better week than I did. Let's keep plugging away and see if we can all get into funded land. See you later. Bye for now.